Prepare for shock. Hey everybody, you're watching Bull, Boom, Bear, Bust, back with another dose. BX4 back in the building. Please make sure you are subscribed. A lot of economic financial news to get caught up on. But yes, we are headed for some very, very interesting times, to say the least, as if they weren't interesting enough already. We've got a new administration taking over in January, and it's going to be very interesting to see how they're going to keep these bubbles inflated. If not, remember, they're going to get the blame for the falling prices. Remember, when these bubbles deflate, the entire economy comes down with it, right? When millions of homeowners lose their equity, their bubble inflated prices go down, folks, it's game over because confidence plunges. And that's the one thing that's keeping people confident right now, besides promises of future rate cuts, is these asset prices, elevated asset prices, the stock market, home prices. So that is something that's going to be very, very tricky to navigate. I wouldn't want to be running this economy, or I shouldn't say running, because the new administration really doesn't run the economy. It's mostly the banks. It's all driven with debt. And we're going to prove it once again. We've got some mind-blowing, in my opinion, mind-blowing numbers to get into today with the economy, with inflation, commodity prices, you name it. Let's go ahead and get into it right now. Consumer Price Index up, not just month over month, but up year over year. We increased just since October from September, 0.2% month over month. So not only are prices not falling, they're still going up every month. Now that put the 12-month inflation rate at 2.6% when you look at the CPI number. Core CPI was even worse. That's up 3.3% year over year. But look at this. Here's the sad part of it. Inflation adjusted earnings, hourly earnings for workers increased only 0.1% for the month and only 1.4% year over year. Either way, much lower than the 3.3 core CPI. And remember, the core CPI doesn't really tell you the true picture on the cost of living and inflation. So what is your guess? How is the new administration going to keep these bubbles inflated? Right? They seem to be against a lot of the things that were used so far to keep asset prices propped up, namely the down payment assistance programs. But we even have Larry Summers out there warning, inflation shock could be worse than the last inflation crisis because you add tariffs on top of everything else. So we'll see how this plays out, folks. But I would say prepare for shock, brace for fireworks either way. Bring up a chart here for you. And folks, take a look at this. We've got a 10-year chart here on inflation. And take a look here. We're not down to normal levels. If you want to call 2% normal, you see that used to be the normal. It used to be the goal of 2%. In other words, if it was over 2% for a while, you needed to be under 2% for an equal amount of time to even it out for the most part. But look at this. We were hovering around 2% up until 2020. And then, of course, look where we're at now. We needed to go negative on inflation. In other words, we needed deflation in order to average this thing out to 2%. But if you watch the press conference, and we played clips here about the press conference from Jerome Powell at the central bank, he said the 2% target's no longer a target. It's a target for getting back down to, but that's not the average target. He took the word average right out of the playbook that they used to say all the time. They used to say average 2%. That way they can try to justify when it ran over 2%. That shouldn't be a big deal because they can just run it under 2% to make up for it. But that's off the table, folks. So expect the cost of living crisis to get worse. And maybe it's not you. Maybe you're not in a crisis. But it's funny. I talk to a lot of people that don't think that we're in a crisis right now. They say nothing ever happens. Nothing ever happens. What are you talking about? Nothing ever happens when you're in record levels of debt. And most people that I ask how they're doing financially, they actually are not doing well. Once you get into the details, the numbers, how much debt they have versus savings, most people are pretty bad off, but they just accept this as the new normal. Folks, I grew up with my parents telling me about their finances, telling me they paid off their home in 20, 21 or 22 years, something like that, on one income. All right. And this was in the 90s when they paid off their home. So obviously a different world, but people that don't remember the 90s or didn't grow up then tend to think that just being in debt for life is the normal. And these amounts of debt, they say this is normal. Folks, this is all propped up by debt, not just amongst consumers borrowing money, but even the government. Take a look at some of the numbers here. Let me just give you this here. For the month of October 2024, which is the first month of the 2025 fiscal year, the U.S. government brought in $327 billion in revenue, mainly tax income. $327 billion income, but spent $584 billion, folks. $257 billion was borrowed to get through just the month of October. Let me say it again. $257 billion was borrowed just to get through the month of October. So it's interesting. We have the powers that be giving us credit scores. Giving us credit scores when they can't even balance a budget. So they're judging us on our debt management, but yet they can't balance a budget. 44% of government spending had to be borrowed with new debt added to the national debt, folks. That's why the debt continues to increase. This has been this way ever since the early 70s when we got taken off the gold standard. We showed you a chart here, a 50-year chart of inflation, and you notice that right after the early 70s, inflation started ticking up, and things are just continuing to get tighter and tighter for most people, even when you look at incomes. And those are for the people that are actually working, right? What about the people that are not working? Nobody talks about the labor force participation rate. We now have 100 plus million people out of the labor force, working age people out of the labor force. So no wonder they don't have enough tax revenue to cover all the spending, folks. And people, take a look at this. This is a chart of the latest budget deficit. And what do we see here? The worst since 2020. So again, we're at pandemic panic era levels of government spending. Pandemic era levels of government spending. And it's likely only going to get worse. I mean, look, people thought that things were coming down. We weren't spending as much. We were getting back to pre-pandemic numbers. But then we just had a big spike up in October. And it still amazes me that people still don't understand. They don't realize why homelessness continues to get worse and worse and worse. And maybe you're a homeowner, and maybe you're okay, but it's affecting a lot of things, a lot of people, a lot of businesses are affected by the homelessness. And not just the sites. When you look around and you see all these tents everywhere, which is kind of depressing. Things like this. Take a look at this here. San Diego homeowners left to clean up homeless encampment on their property. And I told you I showed you actually the end of my driveway where there was a fire set because homeless people were camping out. Folks, this is something that's really starting to affect more and more people. And I read a report here that San Diego, with the homeless encampment cleanup, they cleaned up something like 150,000 pounds of junk, debris, cleaning out these encampments, folks. It is insane. And with them sweeping certain areas now because they're trying to clean up the sidewalks and the city areas, we have more homeless people going out into the wooded areas and in many cases on people's property because they've been moved away from the places that they normally camp out. So it's pretty interesting. The most interesting part, I think, is there's no solutions anyone's actually introducing. I've said here several times things that I think would be good ideas, such as all the billions of dollars we're sending all over the world. Let's build some tiny homeless areas that are fenced in and maybe have someone test these people to be able to get to their home. I think that would be a good incentive to offer someone shelter in exchange for getting clean and getting off whatever substances that they're hooked on. And then some folks will say, "Oh, that'll never work. Who's going to pay for it? Who's going to guard these tiny home places?" Well, you've got the government now, one of the leading job creators. Government jobs are usually, if you look at the month-to-month numbers, it's the biggest or second biggest job creation area is government jobs because the government can just spend endless amounts of money and hire more and more workers. Well, let's hire a few workers in each city, have the tiny homeless camps. But see, nobody's talking about doing that. Now, maybe the new administration will have some solutions and things will get better, not just with that, but with a lot of other things. But it's going to be very difficult unless they start talking about some real solutions. Right now, I'm not hearing any solutions. We're seeing new people being appointed to this cabinet, that cabinet. But from all these people, I'm not hearing many solutions at all being discussed. But how does this typically pay out? Does all the money that they borrow, the billions of dollars, for example, over $200 billion just in October alone, all the money that they borrow to create these jobs, it never fixes anything. In fact, they expect people to have to pay for this more and more and more through taxation and even toll roads. Look at the story here with toll roads. And this is in Virginia. Virginia family drives RV just 45 miles on state toll road and gets hit with a $576 charge, folks, for driving just 45 miles. And it was legitimate. Jeff knew there would be a toll. He figured the RV might add a little extra cost. He was thinking maybe $20 or $30 each way. He saw it as a fair price for saving time, folks. These toll roads are out of control. Imagine his shock when he saw the charges roll in days later on his Easy Pass bill, a $569.50 charge. At first, he thought there was an error, but after logging into the toll website, he learned it was all legitimate, folks. What a ripoff. All the things we pay for, ever since we first start working, we get part of our paychecks confiscated. And now we have to have toll roads, all these extra charges. Yet they can create money out of thin air for other things and just borrow it. But they can't borrow money when it comes to your portion of what you pay, folks. It's the biggest scam in the world. Nobody talks about it. Nobody even understands what's going on here, folks, because they don't realize the type of monetary system that we're in right now. And I just have to read more of this because to me, this is just so outrageous. It's just the latest example of the outrageousness here. His 3-axle RV was charged according to its size, which was only about 22 miles each way. The total felt like price gouging, he said. I-66, managed by I-66 Express Mobility Partners, they use dynamic pricing. This means the rates can adjust based on traffic demand. So when you get on the freeway, you don't even know what your rate's going to be because you have to try to gauge, look around and see what the traffic is to try to gauge how much you're going to end up paying. How many people got hit with charges like this? It is insane, folks. Household debt nears $18 trillion as delinquencies pressure consumers, folks. Delinquencies continuing to get worse, getting closer to the financial edge. They're going to need to come out with a lot of new shenanigans, a lot of new programs to keep people from getting pushed over the edge. We've been talking about it for a while. Nobody knows exactly when everything's going to hit the fan. We're seeing more and more people, though, get to that point where they just can't add any more debt or they can't carry the debt that they have. But yet we're supposed to be celebrating as consumers slowing inflation. Aggregate delinquency rates edged up from the previous quarter with 3.5% of outstanding debt in some stage of delinquency. Around 126,000 consumers had a bankruptcy notation added to their credit reports in the third quarter 2024. But folks, one of the biggest jokes of a headline has to come out of Reuters. Look at this. New York Fed says household debt up in third quarter as rising incomes ease debt burden. Wait, so if rising incomes were actually making things easier or easing the debt burden, why is household debt up? Folks, you can't make this up. So rising incomes are easing the debt burden, but yet debt continues to rise. Folks, we know this is all funded and propped up and supported on ever-increasing amounts of debt, also known as a Ponzi scheme, right? So what does a Ponzi scheme need to keep from imploding? Well, they need more suckers to come in at the bottom to funnel or to prop up or to fund the top of the pyramid, the people that got in first. In this case, we have the central bank, of course, at the top of the pyramid. And I'm sure most of you have heard the term pyramid scheme, Ponzi scheme, basically interchangeable, but nobody realizes what's going on here. A very small fraction of the population actually realizes that. I don't see any other financial channels really talking about things in this way. I think you, my audience here, might be one of the small segments of the population that actually understands the full big picture on this. All right, so enough of the causes and the symptoms. How do we prepare? How do we get ready? How do we prepare for what's going on here? Well, when it comes to home ownership, be very choosy about how you spend your money, but also where you live. There are some areas where you could still get affordable housing, and it's not on the coast. It's not in California. And I've said this here a few times. If I would have moved to California in the past 5 years, I probably would be one of those tents on the sidewalk that we just talked about, or a tent under the bridge, wherever, maybe in the woods now because they've swept all the camps. Maybe I would be in a tent in the woods somewhere, which is scary because I have a family. But in other words, if I would have moved to California just recently, I probably wouldn't be able to keep my head above water. But there are some areas where things are still affordable. Let's look at home prices real quick from state to state. And let's go ahead and start right here with the most ridiculous. California, $790,000. This is as of October, I believe. Let's go with the West Coast here. Washington, $604,000. Even Nevada, $456,000. Arizona, the oven, Nevada too, especially in the summer, $439,000. Texas, a little more affordable, $302,000. But if you want to look to the most affordable areas, you've got to go to the Midwest up here and the Rust Belt. And what do we see here? We see Indiana, $243,000. Iowa, $224,000. Nebraska, $260,000. Kansas, wow, $227,000. Oklahoma, $206,000. Let's see how low we can go here. Louisiana, $200,000 median home price. Arkansas, $206,000. Wow, Mississippi, $179,000. Alabama, $225,000. So it looks like Mississippi is the lowest at $179,000, folks. A lot of poverty in Mississippi. Now, we talked a few minutes ago about how government jobs were so prevalent in the new jobs added numbers. Let's go over to DC here on this map. And what do we find here? 710,000. Sorry, let me go ahead and bring the map back up here. 710,000 median home price. Very small. I've got to hover over it to be able to show it to you here. $710,296, folks. So where does it end? How will they keep these bubbles inflated? And if they don't keep the bubbles inflated and the economy implodes, how will they explain that? They were supposed to come in and make things easier for everybody, but yet if people lose their equity, panic will ensue, and the new administration is going to be backed into a corner. So are there bigger things at play here? Do they have bigger plans that we're not discussing here? There are some people out there that think we're going to be entering a whole new financial system, not just with the BRICS nations, but other behind the scenes things they say are happening. Right now, it's just all hearsay and word on the street type of thing. But we'll have to see how it plays out. I would say, back to getting prepared for this and how to play this, keep your eye out for investments. I still look for stocks to short. And in fact, I'll talk about a new position I just got into. I'll talk about that in my next video. I still continue to stack silver. That price has been suppressed. Remember, with a system of money that you can just create dollars at the click of a mouse, they can also manipulate prices of real world goods like metals and commodities. They can manipulate that in a digital platform with derivatives, etc. So it's a kind of a tail wags the dog type of situation where the physical price is being manipulated by the digital, or what we call the paper price, through online trading platforms, where they could short something to infinity. They can bring the price down to zero on a real world item. Look at oil, went down to zero in 2020 because of online trading, digital trading, paper trading. So folks, stack the silver. That's the big one because that's been so suppressed. If they let the price just go to where it should go based on supply and demand, folks, you would see $100+ silver. I'm guessing $500 plus. I'm hoping it'll get here very soon, sooner rather than later. I think we're getting closer and closer every day. Nobody knows exactly how much longer we're going to be chugging along here with this bubble economy, but it's going to be very interesting with the new administration. to say the least. Please let me know what you think down in comments, and I'll be reading your comments in this report. Thanks everybody for being here. As always, keep stacking. Bye for now. Peace.